welcome. Good morning. Good morning. Welcome to the Trader's Crib. I am your host, Randy Michelle, and we are kicking off the month of September off right with our first free live webinar on our new platform. I'm so excited. I'm excited for everyone who was able to make it here this morning. I know it's early for some people, but this is the best time to catch the liquidity of the market. So I don't want to waste too much time because we have a busy agenda for today. And I want to ensure that all of the new people, if this is your first time in the Trader's Crib, please introduce yourself in the chat and say hi, and let us know where you are from, right? Because we have a lot of new faces in here today, and I am so excited for that. Also, for my more experienced traders who are with me this morning, as I go through my presentation, and I would ask that you all do not blurt out moves. I'm well aware of them. I am not going to trade on FOMO, to lead by example, but I would encourage you all to drop the trades in the chat that you are looking at. Therefore, it will allow the newcomers in the room to kind of get a feel for what live day trading is like. We're going to get into it anyway, but it'll kind of keep everything going back and forth as far as like a conversation between the experienced traders, and the new traders can learn what to look at, okay, as your alerts are going off. So that is what I will ask of my experienced traders in the crib this morning. So I don't want to waste too much time. My presentation was acting kind of funkified. Let me see if I can get it to act right. And we'll get into our presentation. And then from there, I will go into what I normally go into on my live day trading calls as far as fundamentals and things like that before we start the live trading session. So I'm trying to get as much of it in as fast as I can, because I know my experienced traders are going to be eager to take trades. It's Friday and price looks like it's running up. If you guys can see my chart over there, it is moving to the upward. This is the futures. So I'll get into all of that. But first off, before I start anything, we like to start off with mindset and getting our mindsets right for the morning. It just kind of helps us be calm. If you guys were here earlier when I was playing the music, I like to play like a deep meditation music, because trading is about 90% psychological. Therefore, keeping your anxiety at ease, keeping your mind calm is what is going to keep you profitable as you develop and enhance your trading skills. So the strategy is really easy. It's the mindset of putting your live money in the market that is going to is what you're going to have to like regulate in order for you to overcome that and be profitable in this market. All right. So welcome again, everyone, and let's get started with mindset. So today we're going to talk about self-worth and self-esteem. All right. And so this is just a quote. I have an abundance deck that kind of keeps us in the right mindset before we start our trading day. So today's statement around self-worth and self-esteem. I honor myself by doing things that please me, not only those that please others. I am empowered as I release the need to live up to other people's unrealistic expectations of me. When I respect and approve of myself, others will naturally do the same. I teach others how to treat and respect me by how I treat and respect myself. I know I am worthy of love and respect. The boundaries I create with others acknowledge my self-worth. All right. I know that can relate to everyone. Boundaries are important. So you want to keep those boundaries and respect for yourself as you move through. All right. So I'm going to bring over my presentation here. Hopefully Canva doesn't give me any issues and we can get started for today. Everybody can see the presentation. Can I get somebody to confirm that? Thank you, Tasha. Perfect, perfect. All right. So this morning we're going over the fundamentals of day trading. As I said, we have a lot of newcomers, so welcome, welcome. We're going to go over just the overall basics of market structure, and I'll introduce, stocks, a little bit of options for futures, and then a little Forex. I don't trade Forex often, but I do know about it because the goal of the Trader's Crib is to help you discover yourself as a trader. Therefore, options may not be what you want to trade. So you have futures, you have Forex, and you have bonds, but I don't talk about bonds because I don't trade bonds. Okay, so we'll just leave that to the side, but I dropped it in there for you guys. All right, let's get started. So today's agenda, welcome, is going to be first up. Welcome again, who we are, what is the Trader's Crib. Then from there, we'll be moving on to charting basics, giving you definitions of what is support and resistance. From there, we will move on to candlesticks and how to read the candlesticks, because candlesticks are everything. From there, we're going to combine those basics into fair value gaps and order blocks and what they are and how to identify them. From there, I will go into a little bit of what futures and Forex trading is, and then I will take off into our live day trading session, where then I will ask my experienced traders to kind of jump on mic and do what we normally do as we discuss the market. And then I will ask of all newcomers to please hold all questions. You may want to have a pen and paper for this session because they're going to give you a lot of information. So write down your questions and we will have time at the end to go through all of the nuanced questions. Of course, you can always email me on the side at randy@thetraderscrib.com if you have any further follow-up questions and you want to just chat more one-on-one or schedule a one-on-one with me to clear up any confusion that you may have. All right. So let's get into it. First up, what is the Trader's Crib? The Trader's Crib is an online day trading community, and we trade stocks, options, futures with a little sprinkle of Forex. We meet every other Sunday and Monday through Wednesday to trade the markets together live. Trading can be a lonely journey, so the Trader's Crib is here to support beginner to experienced traders on their journey to success. I sit at this computer all the time, and it gets quite lonely. Sometimes you need the isolation, but sometimes it's like I would like to discuss what I'm thinking with somebody else. So that is how the Trader's Crib was born. We're going into our second year of business. So yay, I survived the first year of a new trader business, but it began because I was trading alone and that mindset was getting to me. Like I said, our mission is to help you discover yourself as a trader. So we share ideas, we share our research, we share everything that we can with each other so you can define your trading style and your trading strategy for you. I have a strategy that works for me. I will be teaching that strategy today, but that strategy may not be for you. This crib is not a copy and paste. I'm selling my strategy and it's just going to work for you. That's not how it works. You're going to have to figure out your lifestyle, your schedule, your mindset in order to create the trading plan that works best for you based on the fundamentals of the market, right? That are going to keep you profitable. All right. Trading, like I said at the beginning, is 10% strategy and about 90% mindset. So you are going to discover yourself as a trader in this market. If you don't know yourself, the market will let you know who you are with a quickness, okay, by making you lose money, unfortunately. But that is the quickest way to know, like, I need to work on my impulses. I need to work on my stresses. Like all of that, the market's going to it's like a mirror to your personality. Okay. And this is why I love it, because I wanted to work on myself more. And I felt that trading is the only career that I have that has really helped me learn more about myself and help me become a better mother. All right. Like my name suggests, my tagline, I am the mama bear trader, because I learned most of my trading in a bearish market and I'm good at catching price going down, but I know how to catch it both ways. So moving on to support and resistance, the basic fundamentals of supporting of trading, of technical analysis trading, I would say, because I am a technical analysis trader. I don't use a lot of indicators, but I do read the candlesticks. All right. You have fundamental traders, and fundamental traders are ones who are going to look through all of the company stock reports, earnings reports, and what the company is doing, and they base their trades off of the fundamentals. I base my trades off of the technicals that are on the chart. All right. And so with those technicals, support and resistance is the major key. It's the baseline of everything. So support and resistance is based on supply and demand. When demand is greater than supply, price rises. When supply is greater than demand, price falls. Very simple. Sometimes price will move sideways when supply and demand are about equal. And you can use support and resistance as entry, exit, or stop loss, depending on your bias as a trader. And so you will see that today when we enter the live trading session. All right. What is support? Just to define that in more detail, support occurs when there is a trend in a downtrend in price action that is expected to pause due to a concentration of demand. Support can be a price level on the chart or a price zone, and buyers in an area, and support is an area on the chart that shows buyers where to buy. So and I'll show you a picture of this to help clear up exactly what that means as a concentration of demand on the chart. It's very easy to see. All right. And it is price is supported, meaning it's not going to fall past a certain level because there is support there. All right. Next up, resistance. Resistance occurs when there is an uptrend in price action that is expected to pause due to a concentration of supply. When price moves higher, at some point, selling will overwhelm the desire to buy. This level can be identified on the chart, signaling sellers to sell. All right. So it's kind of like the ceiling. You could think of resistance, you could think of support as the floor, and resistance is the ceiling. You cannot, once you bounce and hit the ceiling, you're probably going to come down, right? Probably. Keyword there is probably, because things do like to break through the ceilings and break through the floor. All right, so here is an example of support and resistance on the chart. I took a snapshot of TradingView. TradingView is the application that I use to chart, and I can look at everything with TradingView, which is why I like it. I can look at cryptocurrency if that tickles your fancy, as well as Forex, as well as futures, as well as stocks. All right, you're just all in one house. So this is a snippet of the futures S&P 500 mini futures of the chart yesterday. And as you can see here, we have this bottom green line of support. Why? Because price has bounced off of it, and it's kind of like the floor. It's holding it up at the bottom. That's support. Then you have resistance because it came up and it hit the ceiling and it didn't break through anymore. So that is resistance. Simple. Keep it simple, right? We're not going to overcomplicate it. All right. Next up, candlesticks. Again, this presentation is being recorded, so if you guys missed anything, I will have it posted to my YouTube channel. Just want to let you guys know that. So candlesticks. What is a candlestick? A candlestick is a way of displaying information about an asset's price movement. The body represents the open to close range. So therefore, in a bullish candle, right, the bottom of the body is going to be the open and the top of the body is going to be the close, and vice versa for a bearish candle or a downward falling candle, right? Where price open is going to be at the top and price close, because it trended down that day, is going to be at the bottom. The wicks indicate the intraday high and lows, meaning that when price opened on this bullish candle example, it went up, up, up. It went even further up to this high, and then it began to retrace back down. And by the end of the day, by 4 o'clock, when the bell rang, price closed here, right? And the same thing happens here at the bottom wick. So price would have opened, it could have came up, it could have came back down, then went up, 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 then went up a little higher, then came back down and closed here, right? So it's the intraday highest high and lowest low of that particular, I would say, time frame. I wouldn't want to say day, because we look at these candles on different time frames. You can look at them on the daily time frame. You can look at them on a monthly time frame. What that means is each candle that you see will represent a whole month, or each candle you see represents a whole day, or each candle you see represents a whole 5 minutes. You can go down as low as 1 minute. You can actually go down as a second. I ain't playing seconds. That's for the institutional traders to play that. My levels are 15-minute and 2-hour. So that means each candle that you see on the chart today during a live trading session will be either was created within a 2-hour time period, or created within a 15-minute time period, or the daily. That's probably where I'm gonna float and concentrate on today. The color of the candle reveals the direction of the market movement. Green or white, depending on the chart that you're looking at, indicates a price increase, and then red or black indicates a price decrease. All right. So now let's get into candlestick patterns. When those individual candlesticks come together, they form patterns over time. These patterns we can use as traders to identify major support and resistance levels. We can identify reversals with the patterns and continuation in price action. And we can set entry, exit, and stop losses to manage our trades with the patterns. All right. So the patterns are very, 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 very important. I love candlestick patterns. So I'm going to go over a few candlestick patterns that I believe all traders should know, beginner to experience. You should know them. They come up very often in the market. Like I already said before, I'll say it again, that that you have different time frames that you can see these candles on. So what that means is that the larger the time frame, the stronger the pattern, meaning the higher the probability that that pattern will likely to occur in whichever bias it's showing you. So for instance, a 4-hour, a daily, or weekly, right, tweezer top, and I'll show you what a tweezer top is going to be stronger than a 5-minute tweezer top, because the candles are moving every 5 minutes. So hopefully that makes sense to you guys, and I'll show you guys more throughout the live day trading session of what I mean. Okay. Oh, I went back. Try that again. All right. First up are the bullish patterns, meaning price will most likely increase if you see these patterns together. First up is what we call a bullish marubutsu. All right, I didn't come up with these names. Let's pause for a second. These are considered Japanese candles. Konnichiwa. All right, the Japanese came up with a lot of the names of these candles. There is a Japanese candlestick Bible that I do recommend all new traders to read. Just email me, send me a direct message, and I can send you a copy of it for free. I have it on PDF, so don't buy it. But the Marubutsu candle is a single candle. It pretty much shows that who is in control of the market. So in this case, the buyers are in control of the market because it's a candle with no wicks. Basically, that price was just so strong. Buyers just held the market. Price just kind of ran up, and it didn't do any other highs or any additional lows. It just opened here and closed at the top, and that's pretty much it. Sometimes you will find them with small wicks on them, but for the most part, it shows a strong, like in this case, bullish. It shows a strong buyer sentiment in the market. All right. Next up, we have a bullish engulfing candle. So what an engulfing candle means is that one candle engulfs the other one, just like this. And so usually, you'll see the green being the larger candle here if it's going to be bullish, and the inverse red, and I'll show you the inverse in the next few slides here. Okay, so for the most part, all you really want to remember is that you have like price was coming down in this example, and then you get a large candle that's engulfing the smaller candle, pushing price up. And what you want to always trade with is confluence. So that means in conviction. So that means you want to wait on the next candle to confirm that this pattern is actually a bullish engulfing pattern. So this is what I mean by higher probability. When you see this pattern on a 5-minute, it's likely that this third candle that's going to form may form in the downward position, meaning that this is not a bullish engulfing pattern, that the pattern has failed, and price will probably turn around and go the other way or continue to go sideways, one of the two. If you get a green candle going up, that's your confirmation that this is in fact a bullish engulfing, good to go, price is going up, and you can continue and enter your trade on the next candle and ride price up. The Haramni, where my mama's at in the house. Haramni means pregnant baby, pregnant mother, baby. So if you look at it, you have the mama candle, which is the larger candle, and the baby out in front. So for it to be a full bullish Haramni or true bullish Haramni, the wicks need to be within the body of the mommy candle, right? Because where my mom's at, like when we're pregnant, right? We don't have like a foot hanging out somewhere. No, the baby is all inside the body. So that's what it means. All right. So for this particular pattern, again, you're going to see kind of it's making an indecision candle was basically what's happening here. And it's going to turn around and go up. So what you want to see is, again, wait for that confirmation that price is going to go up after you see the Haramni, and then place your trade to take price up from there. Another common pattern, bullish pattern, is called the piercing line pattern. Basically, price kind of like pierces through the other one at about 50% of the previous candle. Okay, so that's what this means. And so price would have been coming down on a downward trend. Price is coming back up, crosses the 50% and closes just a bit above that, piercing through the previous bullish candle, which will give you its confirmation that potentially there may be a bullish run. And so you want to wait for your third candle to form here to confirm that before you enter the trade. All right. A few more common ones before we go to the bearish patterns. We have the tweezer bottom. Tweezer bottoms mean that two candlesticks bottom, like the close of this candle and the open of the next candle are going to match perfectly. All right. Not really, the wicks can be hearsay, but if the wicks match and the bodies match, it's a stronger pattern. Just put that little 2 cents out there. So usually price will be coming down like you see here, and then price will form a double bottom, meaning that price tried to break down past the support level and could not break. So it stayed flat on the floor and price is going to come back up. So again, always wait for your next candle to confirm that price is going to continue up before you enter the trade and ride it up. Morning star is similar to, I would say, it's a 3 candlestick pattern. So the tweezer bottom is a two candlestick pattern. The morning star is price coming down, making this doji indecision, like, I don't know who's going to be, like, the sellers were in control. Now, do I want the buyers in control or not? That's what dojis are. I'll go over those as well. And then price will kind of shoot up. It makes like a V pattern. So sometimes you'll follow other traders and you'll hear Vs, right? Vs is usually a strong reversal pattern. So if you see a morning star, price is more than likely going to turn around and go the other way, especially if you find it on a daily or a weekly or a higher time frame. Just be careful on your lower time frames. They do go up, but it's a short-lived move because it's only over a few minutes. Okay. So it could potentially be a short-lived move, but overall, this is a morning star pattern, and you can have it with like this is technically like a spinning top. So there's a little body there. Sometimes you'll have them with a candle here will have 0 body. It'll look like literally like a plus sign. Okay, that's a doji. Either way, price came down, thought about it, and then came back up. All right, that's basically what that means. All right, my favorites, my personal all-time favorites, double bottoms and cradles. When I tell you, and my experienced traders know, I'm always looking for a double bottom. I'm always looking for a cradle because it's giving me the most conviction that price is going to turn around. Why? Because there are multiple candle patterns. As you can see here, everything else I went over is like only 2 to 3 candles. Here we're looking at like 10 candles or more, right? So it's going to give you a stronger conviction that price is going to actually do the move that you're expecting it to do. So a double bottom makes a W. I can show you today that there's W's all over the charts, okay? And when price bounces down, hits the floor, it's kind of like a ball, right? Price came down, hit the floor, bounced up, hit the floor again, and then bounced all the way up. Usually when you see a W on a daily, price is going to go up for a few days, right? And those are the trades that you really, really want, especially if you're a long-term swing trader, all right? Me, I'm a day trader, so I'm about to trade every one of these candles. But for those of you who may want to swing trade, meaning that you're going to stay in a trade for maybe a week, a couple weeks or so, you want to look for patterns like this because you can hold into the position longer and kind of set it and forget it and not worry about it, right? So price will always come back to the neckline of the W. Once it breaks the neckline of the W, price is usually going to continue up. So your conviction here is to wait for this breakaway candle to break the neckline of the W and continue up. All right. And then bullish cradle. All right, where my mama's at, cradle the baby. Okay. So it looks like a cradle, enough said. Usually you can have some more candles down here. It can be anywhere to, it could be up to like 10 to 15 candles sometimes, depending on how the cradle wants to form. Okay. So you're going to be patient with it. But what you're basically going to see is kind of like price that came down is going to be hitting the floor, hitting the floor, hitting the floor, right? It's going to be making a little swoop. You can also call it a J, right? Sometimes it's called a scoop. That's the bell. So my live traders, please just throw all of your ideas in the chat while I finish going through this. And I'm not going to trade on FOMO today. Because I really want to get through this. So, and with ease, because we have a lot of newcomers. So we're going to bounce, bounce, bounce here, and then we're going to eventually break up. And once you get that larger breakaway candle, and usually you want it to break above like the hook that it makes or the scoop that it makes, that's going to be your conviction to take this trade and continue to ride price up. And you're going to have a lot more conviction because you're like, oh yeah, price was just trolling around at the bottom for a while. Now, finally, I got a breakaway. Now I can take price up. All right. All righty. Bearish patterns. Bearish patterns are just the inverse. So it's pretty much everything I just said going the other way, down. All right. So you got the Marty Butsu, a bearish one. Again, no wicks. And hardly any wicks. Prices coming down. Bearish engulfing. You have your red candle engulfing the smaller green candle. Usually this will occur when price hits resistance at the top. So price is going to hit that ceiling of resistance, make a smaller candle, get a nice longer one, signaling a potential breakout. And if your third candle does in fact continue down, you will enter the trade, you will short it, short price down. All right. Harami going the other way. Again, it's still a baby. The wicks and the body need to be within the body of the mom for the harami to be true. Sometimes you can get these wicks to be like way up here. I promise you, it's not a harami. Don't get psyched out about it. All right. You can have them sometimes squeeze in at the top here. You can have them squeeze in at the bottom, all of that. But overall, as long as it's within the body of the mama candle, I would call it, it's going to be a harami. And again, this pattern you're going to see at the top when price hits the ceiling, it's going to do kind of like a turnaround pattern of some sort. And then you always want to wait for your third candle for it to come down. Next up is the dark cloud cover, which basically, I don't know why it just can't be bearish piercing line. I ain't make it up. Don't get on me. Okay. Speak to the Japanese. Okay. So it's the dark cloud cover is bearish. The piercing line is bullish. Dark cloud cover, bearish. Piercing line, bullish. All right. So the same thing, just going in the opposite way. Prices would have been coming up. Then you're going to get the candle to kind of pierce and break down through a little bit over 50% of the previous candle, signaling that price may come down. You will usually have a gap up here, meaning price gapped up to open, and then it's falling down to close, right? And it's going to close slightly below the 50% of the previous candle. And then your third candle, always wait for conviction from the third candle for price to continue down before you enter the trade. Trading takes patience, y'all. Patience. All right. Patience, patience, patience. A few more, just like we had tweezer bottoms, we have tweezer tops, right? Which means price tried to break up at the top of the ceiling and couldn't break that high. So you have flat line equal tops to the two candles. And then again, wait for your third candle to come and price should fall right down nicely. Evening star, so you got the morning star, right? We're going up because the sun rises. Evening star, sun coming down. All right, y'all get it? All right, again, everything's in line with the universe. Namaste, all of that. Okay, so price is coming up. Made a decision. Who do I want to be in control? We're hitting the ceiling. I'm not sure if we want to break through the ceiling or not. Oh, bears took control of the market, so price is coming down. We have an inverted V, right, to the top here. It'll be like a peak, and price will continue down. Of course, always wait for that third candle before you enter the trade as price continues down. Next up, my next favorite. So you have the double bottom, which makes a W, and then you have the double top, which makes an M, right? So literally price trades from W's to M's, W's to M's, M's, W's, W's to M's. That's all it does all day, every day, I promise you. All right. So the same thing applies. It looks like a nice, beautiful M. You're going to wait for price to break the neckline of that M before entering the trade. And as you can see here, price continues down. All right. This example, you do kind of almost have like a triple top. That is a thing as well. It's called like a 3-mountain peak. Okay. Or like a head and shoulders, which is kind of what this is. You have like this head and then these two shoulders on the side. All of those are bearish patterns, going down. So price came up, hit the ceiling, bounced, hit the ceiling again, and now coming down. And then you have a bearish cradle, which is an inverse cradle. You have some funkified names for this, like frying pan, dumpling top, something like that. Look, again, Japanese, okay? Frying pan and dumpling tops, okay? That has to do, that's everything Japanese. So price came down and around, and as it's gonna like curve, it's gonna hit that top, and then it's gonna eventually fall for you. And then you want this breakaway candle to kind of break down past like the scoop of the top, right? And then take your entry from there. All right. Now, here are the uncertainty patterns and continuation patterns. All right. So uncertainty patterns, like, I don't know, what am I going to do? So your spinning tops in your dojis are uncertainty. That's when price is kind of figuring out, it's like being pulled both ways, and you don't really get a lot of body, right? You don't get a lot of body to the candle. Price can't really decide which way it wants to go. And then if you get an actual neutral doji, you're not going to have anybody. Price doesn't know where it wants to go at all. And then your continuation patterns are going to be these flags and pennants. And they are going to occur over a consecutive amount of candles. So what you're going to see is you're going to see price running up. You're going to be like, oh yeah, price running up. Good. Yay. I'm in this trade. And then price is going to pause. And it's going to just kind of troll sideways for a little bit. And as long as it doesn't break below, in this particular bullish pattern, bullish flag, as long as it doesn't break below 50% of the previous run up, it's most likely going to continue to run up, and it's going to break out of its consolidation and continue to blast off at the top. And these can form in various ways. You can get them very rectangular. You can get them doing a price squeeze, which is going to form like kind of a triangle, which is the pennant. They even have some more, if you get deeper into candlesticks, there's even more ways that these can kind of consolidate and break out in different shapes. But overall, you kind of don't want to trade the chop. You're just going to wait for it to do its thing and then wait for the breakout and then take the trade from there. So these are your continuation patterns of where price is going to continue, right? So it may have hit a potential ceiling and it's like, oh, we're going to figure this out. And then it usually is when it's breaking through the ceiling, right? Or something like that. Or breaking down past the level of support or breaking past the floor, okay? It can do it in either direction, depending on what the market is doing. All right, putting all of that together, this is where my trading strategy gets its spice, okay? And it's fair value gaps and order blocks. I didn't make these terms up. Nothing that I presented to you here is made up by Randy. I have literally done the research, and this is all in the research, all right? So basically, what a fair value gap is an inefficiency or imbalance in the market. It's when buying and selling are not equal, all right? And an order block is basically the big institutions trying to hide their next move, and they can only hide so much. So it shows up in plain sight as an order block, which is like a consolidation of candles on the chart, and price is either going to break out of that block. So what the institution banks do is when they're preparing a move to buy in whichever direction they want to buy or sell, if they do it all at once, the market would just like spike all over the place and it would just be too much, all right, for the economy to handle. So what they do is they hire block houses. These block houses' job is to take their multi-million-dollar share order and break it into chunks, okay? And those chunks will show up as like consolidation on the chart. And it's like, okay, you're preparing a move in either direction. That's kind of where those pennants and those flags come into play. Those are order blocks, actually. It's the banks preparing a move and saying, okay, we're going to continue up or we're going to continue down, right? And then you just need to wait on the break for it to trade that move. The difference between an order block and a fair value gap is, again, the order block is going to be a chunk of candles, where the fair value gap is going to be a 3 candlestick pattern, where you're going to see price. So in this bullish example, right, you have 3 candlesticks. You have this first smaller candlestick, a larger candlestick, and another small candlestick. That doesn't always mean that they're going to be small, large, small, okay? What you're really looking at is the space between the wicks of the first candle and the third candle. The wicks between the first candle and the third candle. One more time for the people in the back. The wicks between the first candle and the third candle. If those wicks do not touch, meaning they do not cross each other, and I'll show you examples on the live chart where they cross each other, it's a gap. It's a fair value gap. It's basically supply and demand took off too fast, and that imbalance needs to be corrected. So what I do in my strategy is I look for fair value gaps that are at least $10 or more. If I get a $10 fair value gap, that's my money maker right there. And because it will always need to come back and fix itself and rebalance. The market likes to stay in balance so it can keep going up, right? That's the overall mindset of the economy and the market. We want a healthy economy, right? So you always think like that. And so it's like, oh, well, if we have too much of a supply and demand, we got to come and fix that. So you can pretty much always guarantee, for the most part, always guarantee your fair value gaps will fill in some way. Now, the bearish ones are a little sticky. They don't fill the way that the ones going up fill, okay? And that's because, again, we want a healthy economy. We want price to continue to move up. So if we want price to continue to move up, we may not always clear the liquidity at the bottom. So basically what these fair value gaps are showing is the liquidity in the market. And as day traders, you want the liquidity. Liquidity is a way to make your money. You make your moolah, all right? It works pretty consistently, and it's pretty easy to see. All right, I'm gonna tap into futures and Forex because I'm always gonna start off with futures. As far as my market analysis, give me a second. I kind of want to take a look at this. I know it. I heard my alert go off. I'm not trading the phone. I'll see how high it went up. Not too bad. All right, so we'll wait on it. All right, so futures and Forex trading. Just to give you guys an idea of what your options are as in becoming a trader, because you don't always have to trade the stocks. All right, stocks are cool. Everybody knows stocks, but stocks are a little slow. Just letting you know. And futures and Forex provide a lot more liquidity and more opportunities to trade. And you can trade them based off of everything that I already just showed you. Candlesticks, fair value gaps, order blocks. It's all you need, no matter what you want to trade. Even if you want to go into bonds, fine. You're still going to use candlesticks, order blocks, and fair value gaps. It's just simple. All right. So what futures trading is? Futures is a type of derivative contract agreement to buy or sell a specific commodity, asset, or security at a set future date for a set price. Futures are traded on the futures exchanges like the CME group and require a brokerage account that is approved to trade futures. So not every broker that you find is going to be allow you to trade futures. I trade with TD Ameritrade / Charles Schwab, because for those of you who are in the financial industry know that they are merging. So actually futures trading is actually through Charles Schwab. So it's just kind of tagged to TD Ameritrade, but I digress. TD Ameritrade, Charles Schwab is a broker I would recommend for you to trade it all, because you can trade stocks, options, futures, and Forex all within Charles Schwab and TD Ameritrade. All right. I don't know who to call them just yet because the merger is not over. So just bear with me on that language. Why do we trade futures? It's greater leverage. So trading the mini futures, for example, every $1 move that the futures makes, you get a $50 profit. All right. So that means you don't need more than like a $5 move to make $250 a day. Makes it really, really easy. You have more liquidity. It's more efficient and fair. It's traded 24 hours a day, 5.5 days a week. What does that mean? It means that the futures market opens at 6 p.m. on Sunday and trades continuously with only a 1-hour break. All right. So I could actually change that. It's more like 23 hours a day, because it closes at 5 o'clock on Monday, Tuesday, Wednesday, Thursday, and it reopens at 6 p.m. Monday, Tuesday, Wednesday, and Thursday. And then on Friday, it closes completely at 5 p.m. on Fridays, and it does not open again till Sunday. So if anybody had any, trying to figure out what day is a true Sabbath day, I would say Saturday, because the whole world is believing that Saturday should be off. All right. So there is also no pattern day trader rule when it comes to trading futures. You have lower commissions, you can make money fast, and shorting the market down is easier. So what is a PDT rule, since I brought it up for all the newbies in the house? When you are trading stocks, especially if you're trading in a margin account, not a cash account, but a margin account, all right, you're going to be capped at how many trades you can place per week if you're trading with an account less than $25,000. All right. So if you have less than $25,000 and you're trading in margin, this is only for margin accounts, you will get no more than 3-day trades per rolling 5 days in a week. So that means if you take a trade on Monday, you're not going to take a day trade, meaning that you go in and out within the same day, the same from 9:30 a.m. till 4 p.m. You have to go in and out. That's 1-day trade. If you go in on Monday and then close it on Tuesday, that's not a day trade. All right. It has to be within the same session that you're trading in. All right. That's going to make it count as a day trade. And so if you do a full cycle, full circle around, in and out on Monday. You won't get that day trade back until next Monday, which is just soul clenching. All right. If you're trying to become a day trader, it can kind of mess with your trading psychology a bit, because you're going to worry about having enough trades to trade. Because if you trade more than 3-day trades in a 5-day period, you will get what we call a margin call. You do not want a margin call. Go to my YouTube channel to look at the video on margin call. I won't go into it, but basically, you're gonna have to owe the broker, and then your account is going to be put on a 90-day hold. 90-day hold. One more time for the people in the back. A 90-day hold if you break the pattern day trader rule. All right, ain't nobody got time for that. So don't do it. So I recommend trading in a cash account if you are trading stocks, and even options. Open up a cash account. That means when the broker asks you if you want to trade with margin, you're going to say no, and you're just going to trade against your money, because margin is basically borrowed money from the broker, and that's why they have that limit there. So if you trade only against your own money, you can go in and out as much as you want, as long as your money can handle it, right? If you bleed your account out because you're aggressively trading, then you're going to have to owe the broker as well for funds you don't have. Okay, so just keep that in mind. But cash accounts, especially if you're a beginner. All right, what is Forex trading? Forex, or the foreign exchange markets, also abbreviated as FX, is a global marketplace for exchanging national currencies. So the foreign exchange market is basically you're trading currency pairs. You're trading the euro against the US dollar, or you're trading the Japanese yen against the US dollar, or you're trading the Japanese yen against the euro. There's certain currency pairs that are considered major currency pairs. Those are the only ones I trade. I don't trade a lot of the smaller currencies because I like to make my money and be out. But that's what Forex is. Forex is one of the largest in forms of trading volume, and it offers the most liquidity even outside of stocks and futures and options. Okay. You can make a lot of money fairly easily because of the leverage. Now, this is where, if you're new and you want to trade Forex, I'm all for it, because you could trade 24 hours a day. You can go around the clock. Thank you, Jasenia, for dropping a YouTube channel. Shout out to my crew. I love y'all. It trades 24 hours a day, 5 days a week. It pretty much is along the same lines as the futures schedule, except for it doesn't close at all. That futures does take that 1 hour break in the evening. The Forex does not take any breaks. So, and I want you to be careful if you're new, because Forex allows you to trade with $50, literally take $50, all right, and be in control of 500 times that in the market. I do not recommend starting with a 500-to-1 leverage in Forex if you're new. That is the fastest way people blow their accounts trading Forex, okay? Start with the 2-to-1, and then get to the 10-to-1, and then the 30-to-1, and then you slowly make your way up there. Now, if you want a 500-to-1 leverage in Forex, you are going to need to use an international broker. The United States brokers do not provide that leverage, because they're like, nah, y'all ain't messing us up. We ain't about to let you do that, and stuff like that. So that's where the last bullet point, more decentralized than traditional stock and bonds, meaning like less regulation a little bit there. That's because you're going to use an international broker. And again, you guys can message me on the side if you want any recommendations of brokers, but it really doesn't matter. With anyone that connects to TradingView, it's going to be a good one. I'll just start with that, because TradingView connects to Forex brokers, where you can kind of connect that broker to TradingView and trade and execute the trades all on a chart and all that at once. So you can do that. But please be careful, because yes, you can start with a little bit of money, but you can also blow it. I met a guy that blew over $167,000 in his account messing around with this leverage. Just be careful. So how do you make money in Forex? You're going to make it by using what they call PIPs. PIPs is an acronym for percentage in point or price interest point. And a PIP is the smallest whole unit price move that an exchange rate can make. So for example, most of the currency pairs are trading at $1.5724, cents. That's how they move. So in this example down here, that last the fourth decimal place point after the decimal is going to be considered 1 pip. So for instance, this is going to be the 1 pip. This is going to be tens. Y'all go come back to elementary school. The ones, the tens, the hundreds, the thousands. That's the pips. All right. Ones, tens, hundreds, thousands. That's the pip. And one more time for the people in the back. The ones is the fourth place. The tens is the third place. The hundreds is the second place behind the decimal, and the thousands is the first place behind the decimal. The only currency pair that doesn't follow this rule is the Japanese yen, because the Japanese yen is at $104. So your pips start 2 decimal places out and then come back to the whole numbers from there. All right. All right. That's just a little, put it all in your brain. I know that was a lot this morning, but I wanted you to know what your options are as you begin your trading journey, because we all don't have to start with stocks if you don't want to. Okay. You can start with stocks with, a little as a couple $100 as well. You don't have to have a big bank account to start any of this trading, but the more money you have, the easier it is to make more money. All right. So that's just the way that goes. All right. So we're going to move on. It's 10 o'clock. The market has done its first 30 minutes of volatile swing moves or whatever. So we're going to start the live day trading session now. So one more time for the people in the back. I will encourage my experienced traders to do what we normally do as far as, raising hand, getting on mic, dropping in news, what the market is doing, what trades you may have entered and played, and all of that. I will ask that the newbies, please hold all questions to the end, as I would allow enough time for you guys to ask anything that you want, and even ask questions to the experienced traders who may have taken a trade that I don't take, because that's the reality. They take stuff I don't take. I'm just the host of the space, so we can all be a nice, comfortable family and trade together. But overall, they like tickers, I don't. I like tickers, they don't. And ticker is is like Adobe, or the abbreviation of Adobe, right? The abbreviation to Apple. Those are tickers. So a lot of new vocabulary as we begin the day trading session. So I am going to close out and we'll come back in a minute. So let's get into what a live day trading session looks like in the crib. And so it starts with fundamentals of news. And the first 3 fundamentals we look at is Forex Factory, CNBC, and this is just trader's choice if you like CNBC or Benzinga. That's trader's choice. I'm bring them all over here. Okay. We start off with Forex Factory. Why do we start off with Forex Factory? Because Forex Factory is going to show us for the week what volatile news may enter the market that we need to look out for, that are going to potentially give us our plays for today, right? So we do have news at 10 o'clock. So this is actually perfect timing. So we'll see, because we got 3 minutes until that goes. So for the week, we pay attention to the red folders here. Red folders is what's going to show us potential additional liquidity that we can take in the market and things like that. So today is Friday. So we're looking down here at 8:30 a.m. Eastern Standard Time. During the pre-market hours, we had the unemployment rate come in, we had the non-farm employment rate change, and the hourly earnings, right? And we're paying attention to this column here, these 3 columns over to the right, that show the previous, the forecast, what we're projecting for this particular report, and then what actually came in. So the unemployment rate came in a bit higher than what we expected, which is kind of like not really so good. But if we don't want the Federal Reserve to give us more interest rate hikes, this is in our favor, unfortunately. But we'll see how we can maintain through that. We had the non-farm employment rate come in, employment change come in a bit higher than expected, which is good. And you can always open these little folders and get more information about what they are. So for instance, this is saying, you know, the non-farm employment change, it measures the change in number of employed people during the previous month, excluding the farming industry. Why traders care is the next section that we want to pay attention to, is because job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity, right? So you got to remember the market is moving off of us, the people, and what we do. So this is what we're looking at. So the next red folder that we have coming up in about 1:43, you see they put a nice little timer over here that's letting you know it's coming. It's coming. Is an ISM manufacturing PMI. And that measures the level of diffusion index based on surveyed purchasing managers in the manufacturing industry. While we care as traders, it's a leading indicator of economic health. Business react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy, right? So we're going to see what this report does and see if the market is going to move at all with this news. We like to look at CNBC. Usually we look at CNBC as pre-market first. We can also look at it. It doesn't matter when you look at it, but the major thing you want to look at is this banner up here. This is why I like CNBC, because it gives you an idea of all of the futures that are happening. So the Dow, everybody heard of the Dow Jones, the S&P 500, and the NASDAQ. Well, they have a futures as well, and yes, you can trade it. So you can trade the Dow is up 199 points. The S&P, when it's pre-market and you look at this, it's going to show the futures. Once the market opens, like it is now, it's showing the actual Dow, the actual S&P, and the actual NASDAQ, and not the futures. So we'll look at it before the bell rings at 9:30 to kind of get an idea of what the futures is doing, because whatever the futures is doing, then the actual markets are pretty much going to catch up and do that same thing. And then depending on what news enters the market, then it'll fluctuate from there and maybe turn around or, you know, continue up, or you just never know, depending on what other news gets dropped in during the day. So the Dow rises 200 points as traders bet the Fed will hold rates steady following jobless rate jump. I agree. The rates didn't move much. And I just said that, that if we don't want them to increase rates, we don't want the employment rate to change very much. So we are looking to this month for the Federal Reserve to come in with another interest rate, and we are expecting them to pause and not go anywhere. So usually what we expect and what they say usually holds true. So usually CNBC will also give us a nice little headline that says unemployment rate unexpectedly rose to 3.8 in August as payrolls increased by 187,000. So we'll just take a look at it. We don't get too deep into the news because news likes to put a lot of fear into it, into the market, and you don't want to trade off fear. You don't want to absorb that fear. So you just want to get an idea and understand, okay, what everybody else is feeling. So therefore you can execute your trades accordingly. And then we look at Benzinga, because Benzinga is just a great resource for a lot, just a lot. They give you a lot of information on lots of different markets and things like that. So what's trending this morning is, of course, the red folder news that we had, which suggests that August job creation tops forecast, but unemployment ticks higher, wage growth slows. So again, you can always click into these articles, read them, get a little more key points on them. But that's overall what we're looking at. We just want like a just overall view of what's going on today. The other thing that we do want to take a note is on CNBC is the earnings reports, right? And certain companies, when they have earnings, they can push the markets with it. Case in point, NVIDIA about a week and a half ago. When NVIDIA flew up, the whole market went with it. And then the whole market also kind of slowed down and crashed with it as well when it came back down. So on CNBC, you can go to investing, go to earnings, right? Click calendar here once you are in it, and you will get a calendar date of all earnings for that day. So you can see that you see the week, and it'll tell you about how many different companies are announcing earnings, either pre-market or post. and go from there. Today it's a slower earnings day, which is great. Because sometimes when there's a lot of earnings, especially like bank earnings is something you want to look out for. Popular tech companies like Apple earnings, Nvidia earnings, Amazon earnings, those are key earnings to pay attention to. When it comes to home sales and home improvement type of things, housing market, you want to pay attention to Home Depot earnings, Lowe's, right? You want to pay attention to those companies for earnings to kind of let you know what's happening with the overall industries, right? So pay attention to earnings. We have some traders in the Traders Crib that just trade earnings. So because you know earnings is coming up, you can place a trade to catch that volatile move. Earnings usually always makes that particular stock jump up or down. And there's trading strategies that you can build around earnings reports and just make your money off of earnings, especially for those who don't want to day trade every day. Just pay attention to a company you like, right? And pay attention to their earnings and just be like, I'm going to take advantage of Apple every time Apple has earnings. Or I'm going to take advantage of, you can make this a full-time job. You can make this a side hustle. You can do what you want. Just know that whatever you do, the market is going to show you your personality within it. So just be mindful of that. But that is the fundamentals for today. So I'm so glad I didn't jump into this because I was definitely thinking about it. So first up, what we're going to look at, and I know I have quite a few lines here, so I'm going to clean up the chart a bit and kind of show you live time what we do. So I have that key support and resistance. I have that label for you guys for this particular call, right? This is the bottom here, and this is the top. And we're going to trade in between this. Now, as you guys should be able to clearly see from, I'm gonna just remove it all and just rechart. Not all of it. Let me do it individually. I forgot I want to keep that there. So what you guys can clearly see, this is the daily chart of the S&P 500 futures. All right. I do not trade. I trade the futures first, and I kind of look at stocks that I want to trade after that. Because the futures kind of gives me an idea that S&P is the top 500 companies, right? So it gives you kind of an overall picture of what the market may do. So as you guys can see, we have a W. You see this little wonky W here? We have a W on our daily, which emphasis on the probability that we should get a run up over a few days. We may not. This W can fail. Everything is a probability in the market. So this W can fail, and we're waiting to see if it's going to do that. Usually once a W forms at this neckline, it will do a consolidation move where you'll get smaller candles before it breaks out in either direction. Because we are also hitting a fair value gap. So I use a fair value gap indicator only because I don't care to draw everyone that I find. So TradingView has a great little fair value gap tool. It's called FVG. It was created by Nephew and Sam, and you can add that to your chart so you don't have to draw each and every fair value gap that you see. Now, the daily fair value gaps take more time to fill, and so I usually like to play 2-hour fair value gaps because those are my day trades that I can take and be in and out of the market. But fair value gaps can be looked at as magnets on the chart. Fair value gaps can be looked at as magnets on the chart. One more time for the people in the back. Fair value gaps can be looked at as magnets on the chart because it is an imbalance. Price is going to be pulled to that imbalance in order to correct it. So that is why it's a magnet on the chart. So we have up here this daily fair value gap. This daily fair value gap is also in alignment with an actual an actual gap. Thanks, Tandra. So here we go. So the physical gap, right? You get physical gaps on the chart, meaning like price you see there's a physical gap here. There's a space between these two candle bodies. Some traders like to believe that a wick within the gap closes a gap. That doesn't hold true for the amount of time I've been trading. I believe that price will always come back and put a body in the gap So you have people who trade these gaps. The gaps are all over the place. Let's squeeze, let's go some back in time, and let's just look at, yeah, you got a gap here. The futures doesn't gap as much as the SPX. So here's my watch list. Here's the SPX. The SPX gaps a lot more. The SPX is the actual S&P 500 index itself. So you have the futures S&P 500, you have the index S&P 500, and then you have the ETF S&P, which is the SPY, okay? And the SPY, I would love to say for those who are new, don't want to spend a lot of moolah, yes, it looks like it's $450, but if you trade options with the SPY, it is less than that, okay? You can trade a SPY options contract. Options yield more money. I'm not going to get deep. Options is a whole nother animal. I'm not about to do an options course on this call. Okay. So you have to catch me another time for the options course. But the SPY, you can buy like a SPY call or put. Write these words down if you're new. We'll call and put, because they're on my YouTube channel. Just send me a posted the link, because I do have a introduction to options course on my YouTube channel that's going to go into all those terms. But for basic purposes on this call, you buy a call contract when price is going up. So you pick up the call and you put down the phone. So a put is going down and a call is going up. So you can buy calls on SPY out of the money for like $100, $70, right? 200, $300. And then as it moves in your favor, you can make upwards to, you know, I don't know, guys, where my experienced traders at? Another $200 on that $200, you know, 100% return is always great. So if you put in 200 and you can make 200, that's a good day, right? So that's really what we're doing. But as you can see, you have all these gaps. I can clear this chart for you guys. And we will trade these gaps. We have gap traders in this room, and they literally just look for when price will gap and come back and take the gaps, right? So price will always eventually, this one took a few days, right? But it gapped up and eventually it did come down, and this is what we call a gap close, right? Because the gap is from here, right? So you guys follow my chart to here, okay? So that's the physical gap, and then price will come back with candles and fill that gap. So that's a very guaranteed way to trade as well. You can just wait for the gap, because what the gap signals, it signals liquidity imbalance that needs to be corrected in the chart. So with futures though, because futures trades for a longer time, it trades overnight and things like that, and it will react to the London market and it will react to the Chinese market, okay? So it trades overnight, you have less gaps, but you will have a lot of fair value gaps, which is that 3 candle pattern I was talking about. So right here on the bottom, we have this daily fair value gap. So what I like to do is I like to square them off just so I can see my numbers and see where my entry and exit will be, because you can literally just trade the gap and be done with it. So if price comes back around and this W fails, most likely we'll come down here and fill most of this gap. Emphasis on the most, because this is a downward fair value gap. Price doesn't always like to fill it. Sometimes it will, sometimes it won't. But I'll square it off to help me measure it. So we're at 440, 44.95, right? And then at 44.49. There is a measurement tool on TradingView that makes it easy for you. Just click it where you want it and drag it up, and it'll tell you how much money that space is. So that's $46 move, okay? If it comes back and fills this fair value gap. It's a daily, so it will take time, so be patient. But what I like to do is go in here, and this also creates more support, smaller areas of support and resistance for me to trade on a daily. So price is slowly moving up to this top fair value gap, right? And I'll make it in red because we're doing resistance up here, right? So it also aligns with the physical gap. And I'm going to make note of that with a purple line, because this is where we're getting into some charting. And charting is just marking off your areas based on what you see as far as candlesticks and fair value gaps and order blocks. So this physical gap to the top, a gap to the top is resistance, always. It usually will bounce first before piercing through the gap. I can show you a better example with Apple. All right, Apple is like going in this gap. It should be in this trade, but I got out. So we're just not gonna worry about that. I'll catch the afternoon session. All right, so let's clear Apple to show you. So Apple, and let me clear the fair value gap indicator for a second. All right, so Apple has a nice fat gap, like Alyssa said, love me some gaps, girl, look. And we all, I don't care if you Android, boo you Android people, but Apple is safe to trade, is what I'm gonna say. You can hate the phone all you want, but Apple's been around for some time. A lot of people invest in Apple, just kind of hold money there. So Apple is a strong, sturdy stock to invest in. And the options contracts on Apple are fairly inexpensive. All right. And they're really easy to get in for no more than like $200 on an options contract. And with Apple, if you hold it for the right move, it can make you a good $500 on that, on that same contract. So it just depends. So this is a physical gap. We're going to mark the gap from body to body here, and not wick to wick. When we're marking gaps on the daily, we're going to mark it body to body. All right. And as you can see, price actually broke through and gave it no justice this time. So it did do a small bounce here. If I go to a smaller time frame, you will see where it did kind of hit up and come back down. That's where you got this little wick at the bottom, and then eventually pierce back through. And then now it's it's slowly filling the gap. So this is what we call a gap fill trade. And you can just ride it up to the gap, and your take profit will be at 191.16. Bada bing, bada boom, done. You can play this with options, or you can play it with shares. If you have enough capital and you can afford like 50 to 100 shares of Apple and play the move that way, by all means. So there's more than one way to trade this market always. Right? So if I come down to the 2-hour time frames, I'm gonna drop down. So let me explain something, because all of you guys are like, oh my God, what are these like blue and yellow columns in the back? All right. On my chart, I set what we call the extended day view, meaning that I want to see the pre-market hours I want to see the post-market hours. The dark blue is post, the yellow is pre, meaning yellow morning, right? The sun's coming up, it's the pre-market. And then the post market is the afternoon, the evening. All right, got it. Cool. So you see price action does happen in pre-market and post-market. And if you're trading shares, one more time for the people in the back, if you're trading shares, you can execute shares in the pre-market and the post-market hours. You cannot execute your options during those times. Options can only be executed during the live open market session starting at 9:30 to 4. Okay, that's not my fault. That's the way it works. I didn't make the rules. All right. So just be mindful that if you're trading an options contract, you're either going to close out that day and use a day trade, or you're going to wait a full day to the next day to close out that trade. And most of the time, these trades, especially Apple moves slow as hell. So it's going to take you a couple days before Apple fills. And if you can see, if I come back to the daily view, this is one candle. So each candle is a day. So day 1, day 2, day 3, and we still ain't at the close yet. So you're going to be in this gap close for a couple days. And this is the trades that you want as a swing trader or somebody who doesn't want to sit here all day and trade like my crazy butt. Like, I just love coming in here every day, but that's my choice. Okay. So these are good swing trades. All right. So yeah, so that's a perfect gap, and Apple's doing the doggone thing with that. Okay. What I have down here in my chart, well, some of you may be looking at this ATR and this blue squiggly line. ATR is the average true range, and it tells you about, on average, over a 14-day period, how much money that stock moves over 14 days, the average. So Apple moves an average of $3 per day over 14 days. Get it? One more time. Apple moves an average of $3 a day per 14 days. One more time for the people in the back. Apple moves an average of $3 per day over a 14-day range. All right. So I always leave it here. because it shows on every chart. So we come back to the futures. The futures moves $55 per day on average over 14 day. Okay, this is why I like the futures, because that's a lot of money, right? I don't even need the $55. I just need 10. I just need 10. And if it's gonna give me 55, go ahead, I take my 10 and chuck the deuces and I'm out, right? Easy peasy. So I do like to trade stocks. Apple is one I just own a lot of Apple stuff, and Apple is just a faithful, inexpensive stock to trade. Well, not the options are inexpensive to trade. And I am a tech heavy stock trader, so I do like my tech, but I tend to trade things that have a $7 ATR or above, because I can make my money faster and be done, and I don't have to necessarily wait on the whole move. Apple, I want the whole move because it's just $3, versus like Nvidia over here averages $20, but Nvidia is not for the inexpensive. Just facts. Nvidia contracts can be upwards of $900 to $1,000, and if it's expecting earnings, those contracts can be $2,000 per contract. I'm just being transparent with y'all. So it's not the most inexpensive thing to trade, but you know, buying, holding the shares itself is not a bad move, because I do expect Nvidia to just keep going up and up and up. It is bouncing off of all-time highs. Nvidia has never been this high before. If I squeeze the chart, you see we have no data back here. It's all-time highs. Okay, so you know, get it while it's cheap, because I don't think it's coming down. You know, anybody who's like, oh, I'm gonna try to buy Nvidia when it's $200, you're gonna have to wait on the next market crash, because I do not see Nvidia going down. Nvidia is a microchip that is in semiconductor microchip that is pretty much in everything. It's in my computer. It's going to space. Literally, they're putting in space related things. It's everywhere. So I don't think it's gonna get any cheaper. So it's probably around the cheapest you're gonna get it. Okay, which I know it ain't that cheap. Of course, I do trade a little bit of cannabis. Shout out to my cannabis friendly people in the house. Whoop, whoop. So Tilray is one that I play around with. It's super cheap. And once the federal government just makes this stuff legal, all these cannabis companies, Aurora, Tilray, and a few others, they're just going to fly through the moon. So again, this is a pretty inexpensive one for options as well. Obviously, it's $3 a share, so you can play it with just stocks. Stocks have less risk than options, because options have an expiration date, and that expiration date can come up and bite you in the butt if you don't buy enough time. And if you don't sell it on time, right, you can lose out money. So these are Amazon's, obviously another one that, you know, who doesn't have an Amazon Prime account? I mean, let's be real. So, or at least you bought something off of Amazon at one point of your life. Amazon has a nice W right now, which is great. It has some gaps that it needs to finish filling, but I'm not expecting it to fill it anytime soon. We're doing the whole like trail in this area before we break back up move. And that's what happens at a W. We're right at the neckline. And so we're waiting on that confirmation to say we're going to continue up. Now, it looks like it's blank, but Amazon does have other data to retrace. So if I squeeze, you always want to squeeze your charts and look to see what previous data it needs to come back and retrace to, right? And so all of this is up for grabs as the market plummeted after COVID and is trying to recover. And so this is what we call a recovery. And this is an even bigger W down here at the bottom. So I don't expect price to come down here anytime soon, unless we have, unless the elites, meaning like the Federal Reserve Powell, which we call him Papa Powell in here, because it's like whatever he says goes. So that's why we call him Papa Powell. And unless he says the word recession, or Biden says the word recession, or any of those people say the word recession, which they are intentionally not saying, I don't see us coming down just yet. But we want to keep an eye on the chart to see when the preparation, if it is going to come back down or do something funky, because we are hitting this previous peak, which is an area of resistance, right? And so if we peak this resistance at about 144.45 on Amazon, we do have the likelihood to come down. What we all want, if the market is truly recovering, we want it to break out of its resistance. We want it to break out and continue to the next peak, and then eventually be on another all-time high where it's just slowly going up in the market. Is in a nice bullish market, right? And it keeps just making higher highs. That's what we overall want. But because we fell so greatly, we're going to have to bust through previous highs in order to get back to that trending market, as you can see way back here before COVID, as we were just steadily going up and everything was fine back in 2018 and things like that, right? So that's the overall goal. And I do think we are slowly recovering, but we're going to make some bounces along the way here. So I'm kind of going through tickers because I want to look and see what the market overall did. Anybody catch this Adobe trade? Oh, no, Adobe stopped. So Adobe is another one that is moderately, it's reasonable. All right. If you have a couple grand, you can trade Adobe with a couple hundred. All right. I'm just saying a couple grand because it gives you that cushion. Okay. And I literally mean a couple, like just 2 grand. All right. And if you're trading with margin, if you're trading, if you want to trade some of the advanced strategies that we trade on margin, you will need at least $2,000 to trade advanced strategies on margin. But just to get started, just to buy some simple calls and puts, you can use $500 or less. As long as you can afford the cost of that premium that you have to pay for that contract, you're fine. So like I said, SPY is your cheapest one. And I kind of want to go over some of these tickers for those who are, looking to figure out what they want to trade. So I want to give those to you guys. So Adobe filled its gap over here completely. See this gap? It filled it completely. And so this is what we call an order block. And I'll show you them again on the futures when I get back to it. But this consolidation of candles up here, this is what we call an order block, right? Where they were deciding, meaning the institution, the big banks, the Warren Buffetts, all them people that got way more money than us, the billionaires, right? They were going, what do we want to do with Adobe? And at this particular moment, they plummeted it, Adobe, okay? And price like took a breath and decided, and all these orders were placed, and it was kind of giving you the signals. So you see, you have the engulfing, look at the engulfing, look, it's there, the bearish engulfing candle, engulfing the top, coming down, and your next candle's just plummeted. So everything I showed you does show up in real time. Here's your evening star. Boom, your doji, price came up, did a V, now it came down. So that is what, that's what you're looking for when you're trading all this. All of that I just covered this morning is in this. If this ain't a big old cradle, it's huge. Okay? Cradle with no T, because I'm country like that. But y'all got it. So, if here's the neckline, let's put some lines on the chart. Here's your neckline, right? It broke right out of it. Boom, cradle, long term. This gives you so much conviction. I hated when Adobe was doing this. Because I really like trading Adobe, but I like trading Adobe when it does this. And I wasn't paying attention to it this week. I was paying attention to futures. So I missed these past few days of run up on Adobe. But I did catch some other moves. You can't catch them all. This ain't Pokemon. You're gonna try to catch them all, but you just can't. All right. So I have a lot of 90s, early 2000 corny jokes because that's where I grew up in the 90s. So yeah, just throw those out there for the new people in the crib today. So yeah, so Adobe it gapped up here this morning, so I'm not surprised that it wants to come back down and like fill its gap. Most charts don't like to keep gaps very long if they can help it. Some stocks are different than others. As you're on your trading journey, you will have to learn and follow a stock for a while to see how it moves. You can tell from me switching through the different charts that each one moves differently. So Adobe did this whole like cradle move and broke up, while Apple, right, was sitting here doing more like stagnant VW. It wasn't like as nice of a cradle as Adobe. Every stock moves differently. Why? Because every stock has a different CEO, right? And they're always doing different stuff. That's just the reality of it. So you gotta get in the market, look at it, study it, and figure out what moves are best for you to make based off of, based on what that company is doing itself. All right. So other things that I like to do to make sure that you kind of have an idea what the market is doing. So you see I have the YM1 is the Dow futures, the NQ1 exclamation point is the NASDAQ futures, the DJI, these are all the tickers that you need, is just the overall Dow index. And then the IXI, don't I make up the name, all right, is the NASDAQ composite, all right, which is always delayed. No matter how much money you pay TradingView, you're not going to get it to not be delayed. So what I usually focus on is the futures on both of them, just to get an idea, again, on what the overall market is trying to tell me by looking at the Dow and the NASDAQ as well. So I'll look at the chart, and when I chart the Dow and the NASDAQ, I really am just charting the overall. I'm not looking to trade it. I don't really trade it. I do have a few traders in here that trade the NASDAQ, but I don't. That's just my choice. But I will go in here and chart the levels and look for breakouts. So, and look for where price may go because, for instance, let me go to the NASDAQ. The NASDAQ will help me better trade Apple and NVIDIA. Why will the NASDAQ help me trade Apple and NVIDIA? Because Apple is on the NASDAQ. NVIDIA is on the NASDAQ. So whatever the NASDAQ is doing, Apple and NVIDIA will most likely do as well. All right. So the more confluence I have, the better trades I can make. So I had a feeling, if you can kind of see here, I'm going to use trend lines. I don't, what I'm trying to say, I don't use trend lines to like gauge breakouts or anything. If some of you may be, studying other traders, I just do use them to draw my M's and my W's. So here we go. Well, like I said earlier, price goes from W to M to W to M. So here's your M, right? And then here's your W. Double bottom to double top. Oh, that's ugly. Over. And then, right? And when it gets to that middle, which is basically where it's at now, it has a decision to make. Is it going to continue breaking up, or is the W going to fail? Like, who's going to win in here? All right. So a trade that I took most of this week was trading the leg of the W to the M, which also aligns with an order block. Where's my square? Right? And order blocks usually form on a larger time frame. Depending on who you're following, they're going to tell you something different. But the way I look at order blocks is pin to pin or doji to doji. As you see, price was breaking out and made an indecision doji, then consolidated up, then made another indecision doji, and then continued to trend down. You actually have two order blocks here almost. And so this space, there's these candles in between those two pins. You can have fake out pins within the order block, just the way it goes. But that's usually the order block. And price came to clear the order block. So order blocks also act as magnets on the chart because it's a consolidation of the concentration of either supply or demand, right? So price is going to be pulled to those order blocks, just like they're going to be pulled to the fair value gaps. So as I come back over to the futures, right, we see the same thing. Now we don't have as clear pins or your dojis in this order block, but you have a larger funkified order block. The other day I marked it off as like 2 order blocks because you kind of have like this one, right? And then the break, it's all about the breakout candle. And then you have this one, and because this is an inverted hammer, it has more wick on it. So you have 2. And so I was pretty convinced price would come up and clear both, and it did. I hit my 45.47, which was the target I was expecting it to hit. I wanted to do it yesterday, but it didn't, and that's fine. And it kind of stalled and did it wonky today, so I didn't trade it. I put my fair value gap indicator back on because you have multiple confluence here. We have order blocks that's going to pull price, and you have the fair value gap that's also pulling price. So as you can see, price just wicked the top or the entry of this daily fair value gap. Now we needed to push in it in order to trade the fair value gap as a whole. All right. Again, this is the daily, so I expect it to take some time to do so. It's Friday, so it may not come back till Monday to do it. But when I come down to my 2 hour, this is where I like to get most of my setups. So the 2 hour time frame, because I want to wrap this up here for questions. I'm looking for the same thing. I'm looking for those large fair value gaps on the 2 hour. And this is where I make my daily money. I use a 2 hour because most likely it's going to do that move in a shorter amount of time than on the daily. I don't have to wait days to do it. I can only wait hours. Now, sometimes those hours can go into overnight hours, but it's still hours and not days. So I don't have a good fair value gap here. This fair value gap is still here because it wicked through, but this wick through is letting me know that this liquidity in this fair value gap has been cleared. It will eventually come up because we have a daily one that is not being shown because we're no longer on the daily, right? We have more candles here. Each candle is 2 hours. But this is the space. I marked off that daily, right? The 45.47 to the 45.91. So this whole space in here is the daily one, but you see we have all these other levels of candle that are going to break up price and probably not make the fill as solid or straightforward as we want it to be. So we really need to wait until we get, what I like to do is wait until I get a candle body that's closing in the daily fair value gap before I take it. Not a wick, a body, because a wick just shows that it got rejected from there. And I need a body saying that, okay, the conviction has been confirmed and we're really going for this move. So because we're wicking up here, it's not giving me much of any confluence. I'm looking at the candlestick patterns. I see the lows getting a bit higher, right? These lows are one is higher than the other, so that's great. But now, right now on the 2 hour, it's kind of looking tweezer topish, right? Where my levels of these two candles are coming, are flatline and coming down. Now we're on a smaller time frame, so this may not hold as a tweezer, or if it does hold, it'll be short term. So it may come down, and we can retrace down here into this lower level again, because price is just going to move back and forth to support and resistance even on smaller time frames. So this is your support here, and this is your resistance up here at 45.35. Support around 44.89, resistance around 45.34. We can trade in between that, but it's a bit choppy of a trade for me. Meaning you have to execute fast, and if you're new, I don't recommend that. Because it's a quick way to lose money. All right. So I'm just waiting, holding tight until price gives me like a real move that I can do. Now, the next real move that I see, if price does come down, I need it to break this level of support and start to enter this fair value. This is a nice fair value gap. What we call these fair value gaps that are along these big candles. So you see we have the wick, the long candle, the small candle with the wick, the long candle, and then here's another small candle with the wick. And these wicks do not touch in comparison to just right here. We have another one where we have a small candle, a long body, and a small candle. But you see how the wicks are overlapping, meaning no liquidity or no imbalance is left within this candle. So that is what I mean by the wicks touching. This is considered touching or overlapping wicks because there's no space. When the space is primarily left on the candle, you have the fair value gap, and the indicator is showing that nice and green for us. So this large fair value gap, all right, is what I would love to trade, because if I measure it, that's $32 just a fair value gap. So I'll just wait, because $32 on the futures, remember, $50 per $30 move. I mean, $50 per $1 move. So that's $1,600 right there. And it's more guaranteed because it's a fair value gap. We just need to wait on price to come back down for it. Versus at the top, I know I have a daily one, but I don't have any smaller time frame ones. So either way, I'm waiting at this moment for the move. What I do when I wait for moves like this, right under the level of support, I'll put a line, I'll put an alert. So I can be alerted, and TradingView connects with your phone and everything else. So whatever you chart here is gonna be copied on your phone, transfer over on your phone. And so I'll get the alert on my phone that ES is doing a move or crossing a level, and then I'll know I need to get ready to take my trade. So you definitely always want to put alerts on your chart. It's good practice so you can be alerted for when, because you got to wait. It's a waiting game. It's a patience game. So I'm just sitting tight. All right. But I'm definitely looking forward to this one when it comes back, if and when it comes back. And if I were to square it off, right, or put lines on the smaller one, what that does is it will help you see when you come back to the daily time frame, right? All right. So yes, you have this daily fair value gap, but you also know that it really needs to get in there because your 2-hour one is a little bit smaller, right? So every line you put, you want to zoom out, come back to a larger time frame, kind of see where those lines line up so you can get a better overall picture of what the market is doing, right? So that's like charting and trading, because I'm always moving my lines depending on what price is doing and looking for the next best move. But my move was always order block to order block, fair value gap to fair value gap. And this particular move right now is kind of like a flaggish, it's an awkward flaggish potential order, another order block pattern, and it can go on for days. Like it can take time where it's just choppy before you get a breakout. And I can show you a great example of where it gave us 40 days and 40 nights of hell that I just could not. I was like, for real. So this area, you see our price is just straight. Like it didn't really go. If we were to square that off, price didn't really go anywhere. Like, yes, it moved, but it didn't really like make new highs or new lows. This was awful. These are daily candles. So we were just sitting here and we got lucky on these long runs and made a little bit of money in between here. But these short candles, like sometimes you can catch the wicks, but don't stress yourself out. Just wait for the breakout, okay? And this one definitely did a bit of a fake out because it did like a I don't know W, where it didn't really give us a full W because it didn't come back up to the neckline. So it just stayed like this. I don't know. I don't know what I want. All right. So that's I mean, we weren't able to take any trades today primarily because price isn't moving fast, and maybe the universe is on my side because it'll be hard to teach y'all everything and jump into these trades at the same time. Because I want a bigger move. So I'm just gonna wait for it, let price chop out this weekend and see what happens on Monday. But I will open up the floor. If any of my experienced traders did catch anything that they saw when I was teaching, I would love for you to share it. But just me looking back at the chart, I don't see anything worth anything. Lily is struggling to break its resistance at 558. Apple's obviously filling the gap, so maybe I can jump back into Apple and show y'all what it is. So Tanza, TR is abbreviated for Tanza. So Miss Tanza is filling the SPX gap. SPX is filling this lower gap in the trade. So let's look at what she's doing. So, all right. So this is SPX. I'm on the 2-hour. So what she's doing is I'll adjust my lines, and she knew price, because price did move up. The futures moved up this morning. So whatever the futures is going to do, the SPX is going to catch up to it. All right. So the futures ran up this morning just a bit. And because it ran up before opening, when the SPX only is open during the market hour. So when SPX opened, it was going to come down. So it opened here, it ran up a little bit, and then now it's coming back down. She most likely, this is the gap that she's looking at, these Globax gaps. And she's a big gap trader too. So she's just trading this gap. Are you taking it? What's your goal? 45. Yeah, she's taking the whole gap. She don't leave no money on the table. I'm gonna tell you that right now. No money on the table for Tanza. She don't leave nothing, not a doggone cent, and I don't blame her. So basically what she is doing is she is trading this gap down. As you got, and I'm on the 15-minute now, because on the daily, you can see she uses the daily actually. So you can see that price gapped up here. All right, because this was the opening, this is a red candle. And price is going to come down and clear out the liquidity that happened from the morning. So it's slowly coming down. It already had wicked all the way down, but she has the same theory as I have, that price will most likely close with a body versus a wick. Sometimes the wicks can stay, but it'll come back very sooner than later, especially with the SPX. So she's waiting on price to close down into this gap, and she's taking the full gap close that you don't see unless you come to a smaller time frame, which is a 40. She said 45.07. I just marked the bottom of this a full candle because these little, I don't even know what to call them because they're not really dojis because they don't have any wicks. They fake me out more often than not, but trader's choice, and the fair value gap is aligning with it. But I like to take profit a little bit before, because sometimes the SPX just doesn't make it. So what she's doing is she's closing this entire gap. So from this purple line, I'm gonna make it purple, to the 45.08, she's just gonna wait. She's most likely in puts, meaning that she's expecting price to go down. So she's in options. She's playing an options contract on the put side. I will bring over my options chain to show you guys what I mean. Because you guys are getting everything in this course. This is a crash course for you if you are new to trading. All right, so here's the option chain. You're like, what, Randy? What did you just do? All right, so you would go to, this is my live account. So what you would do is you would go to, I got to figure out what I'm gonna do with Disney. Disney make me mad. But you would go to trade, and you don't have to trade with TD Ameritrade. You can trade with E-Trade, you can trade with Fidelity. All of those are other good ones. I don't recommend Webull. I don't recommend Robinhood. Okay, I don't recommend those for the stuff that we do, because we can get pretty advanced in here. But overall, she's doing the SPX. So you're gonna put your ticker, you're gonna put your abbreviation in there so you can pull up the SPX option chain, right? You can set a watch list for yourself so you can easily click it. I don't have SPX on here because I don't like trading it that much. And so what you see is a list of contract dates of expiration dates. These are all the dates that the contract will expire, okay? She's most likely playing a couple of days out. You don't need too much time, but you want to buy some time, because options has a time decay. Meaning every day that it gets closer to expiration, that contract is going to become less valuable. That is shown in the option chain as theta. Theta is what's decaying your time. All right. So I don't know what contracts you share, and Tanza, I'm not going to put you on blast if you don't want to share your contracts, but I'm going to go out about 6 days, which is extremely expensive for SPX, but if you can afford it, you can do it. What you see here is one side is the calls right here in this like middle area. If you can follow my mouse, you see calls. So you're going to be on this side of the chart if you're expecting price to go up of the options chain. Sorry, this is considered option. See the word option chain. This is option chain. I can minimize the option chain. I can drop the option chain. Okay, option chain. And then puts. You're going to be on this side of the option chain if you're expecting price to go down. And we're always going to be buying in the Trader's Crowd. We don't sell anything because selling is the easiest way to lose money. So we're going to buy. And so that means there's a bid and ask column. Your ask column is your sell. So you want to stay clear of the seller side. And as you can see, my mouse is showing that little sell underneath it. So it makes it really easy to not mess it up. And then buy. So she's most likely buying contract, and you would click it to buy this contract. This contract is going to expire on September 7th. So you need to get rid of it by then, right? And you right now, your guys are like, oh, Randy, it's only $19.70. No, it's not. It is not $19.40. It's moving around because price is moving. It is not that much. Okay. When you buying options, you're in control of 100 shares of the underlying. This is what makes it so lucrative. All right. You're in control of 100 of the SPX. So you need to multiply this $19.10-20 times 100, which means you're at $1,900. Okay. So to buy one SPX contract expiring on this date, you're going to need about $2,000 to do so, right? And you would execute it. You see all your order details here at the bottom. You're buying one contract. Of course, you can move this to 2 to 3. You can also just backspace out and type whatever you want, contracts out. Okay, I don't want to make no mistakes in here. You're buying it to make sure you're buying and not selling. This is your strike price. Again, I'll get into that in another course. And then you would confirm and send. So when you hit the confirm and send button, it's going to show you how much money you're going to be, your buying power effect is what you're spending. All right. You're going to need this much money in order to execute this trade. Okay. Now, if you buy less time, meaning that you go to a contract that's expiring, so 0, and here's a 0 DTE, meaning that this, this is September 1st, this contract is expiring today. As you can see, if you go to a contract expiring today, it's a lot cheaper. They're only $310, $300, way cheaper. But when I tell you, you need to be sure that the SPX or whatever ticker you're trading is going to do the move that you want that day and fast. Keyword on fast. You don't want to play around with 0 DTE contracts. You want a little bit of time, because how this theta, $3.25, your delta is all you're making. You're only making $25 for every $1 the SPX go up, while you're losing $3. Okay, so this is $300 per every I don't know how on the daily, it's per day is what this quantifies as. So like this contract is supposed to be worthless by the end of the day. That's the whole point. Okay. So that's the whole point, because it's expiring that day. So she most likely is in a put. She is most likely on this side of the chart, or the option chain, excuse me, waiting on price to come down with some time. Because as you can see, if I go out 5 days, that theta is drastically less. And then you're only losing $100, right? While you're moving, at $1,400, at $40 per $1 move on 1,400. So you're not going to lose as much money over here. And she's waiting for price to come down towards her, and she will make money as price comes further and further in the money. Your gray area is out of the money contracts. Your shaded area is in the money contracts, meaning that they're going to make more money for you. So the delta tells you how much money you're making per every $1 move. The delta is showing you how much money you're making per every $1 move. So the more you're in the money, the more money you're making. The more you're out of the money, the less money you're making. And the higher probability that the contract will expire worthless, okay, when you're out of the money. So that is most likely what she's doing. That's just a preview of the options chain and how you would enter orders on the options chain, playing options on any of these contracts. Go ahead, Tanza, because this move is most likely going to do it, and do the thing, because you got a nice, evening star pattern here on the 15-minute. Price is coming down. So this is where we're reading our candlesticks, and it's continuing to come down, and we have a fair value gap. It bounced off this fair value gap twice, but I think now with this pattern of reversal pattern here, the bearish pattern here, it's most likely going to come down and take the rest of it out to close off that little liquidity for the day. And with the SPX, just like the futures, you don't need much of a move to make money. So this is an additional $8. So for those, for those of you getting the habit of following me, I would always encourage you to open up your sim account. TD Ameritrade gives you a free simulator account where you can basically execute everything that we're talking about in practice mode with no live money. Paper money is basically called paper trading money. And you can just see how lucrative an $8 move will be on the SPX, because it is the bee's knees. $5 is even not so bad. And so she says she's been in it since, when did you say you've been in it? Since 45, 45, 45. Oh, yeah, she took the whole damn thing. So, so she been in it like up here, okay? And so she's right, so she got in on this wick, and then she's been riding it down ever since. So she's in profit now, and she's just waiting to take the rest of her profit. All right. So congratulations, Tanza, whoop whoop, for making that trade, girl. She did that. She totally did that whole move down. That's how you day trade. You just find the liquidity and you just trade the liquidity. And SPX and ES are going to give you the most of it. It's going to gap up. It's going to do something, and you just follow it down, close it out, and be good to go. All right. So that's one trade for us. Anybody else jump into anything else? Tandra, did you make anything today? Or you set out? Oh, are you in?
I'm in Tallahassee right now, so kind of handling things. So no, I'm just in what I already was in. I'm in debit. I'm on both sides of SPY. Look at me on both sides of SPY. So I got a call and I got a put debit spread on both of them. So that call debit spread is 450 to 455, which is probably slightly in the profit. But of course the put is way down. It's like 438 if I'm not mistaken. So it's at the bottom. Back down.
Okay.
Yeah, so we get a little drop back down to the bottom, but I have time on both those contracts, which is what I like about those debit spreads. So the call debit spread is November, the put debit spread is October.
Okay. So as you guys can see, she's buying a lot of time, months out, which is, she's a swing trader. I would say she's a swing trader. Tanza is a in between. She's a day and swing. Okay. She do a little bit of both, which is totally fine. But I know Tandra's more of a swing trader, so she's gonna swing trading means she's gonna buy more time and wait for that move to happen for her to collect her profit. She mentioned the word debit spread, which is an advanced strategy that requires at least $2,000 in the account to do. But it is a very lucrative way to it's lucrative, and it also manages your risk because she's buying, call, and put at the same time. So she's able to kind of like manage and kind of hedge depending on which way direct price is going to go. So price doesn't always go the way you want it to go. So you want to have, protection in place. And that's where those types of strategies come into play to kind of give you better protection. And again, Jasenia, drop the YouTube channel for I love you, Jasenia. For anybody who, because I go into more detail on those particular strategies on my YouTube channel because they are really complex. All right. So shout out to everybody who caught the move. I'm gonna see what the afternoon will give me for me, and then I can just give y'all an update on if I caught any money today. But I'm pretty much good. I made my money for the week. 2,000 a week is a great goal. So I made that and then some. So I'm kind of content where I'm at. I don't need to trade anymore if I don't have to. But we're just taking it in stride. And the SPY is also going to do the same thing that SPX is doing. So that move that she's doing, right? You can take advantage. If I take off the extended, you can see the gap a little bit better. Because gap is not really here with the extended day view on, meaning the pre-market and post-market. But for those who don't have SPX capital, like $2,000 a contract and stuff like that, you can do it on the SPY. And I'll bring over the option chain one more time just to show you guys how less expensive trading that ETF is than trading, because there's people in here that only do, and Tandra's one of them. She's a SPY. She's going to be our SPY guru. She's going to focus and finesse the SPY because it is that much cheaper. So if I'm just going 4 days out on SPY, right, September 5th, you can already see, look at that. 99, that's $99, $64, $300, $100. Like, way cheaper, okay? And it's the same S&P 500. So it's the futures, the SPX, and the SPY all doing the same move. So just focus there. There's a lot of traders out here that don't trade nothing else but SPY, or don't trade nothing else but SPX. You don't have to trade all these other tickers if you don't want to. Just pick the cheapest thing that works for you and your patience level and your risk tolerance and go from there. Is just save yourself stress. All right. So save yourself stress. So it's good. And then like I said, it's just cheaper. A lot cheaper. And even if you were to buy, like Tandra says, she bought a lot more time. She did a debit spread, which is a little bit different. But let's just say we go out to October, right? You're still under $1,000. And when you're starting out, this is where I started. I made sure that each trade was no more than $500 and $600 because that was affordable for me. Okay. And so again, you're a month out for it to do the move and you're still at $600 and $700. Easy peasy. Okay. Don't like there are things out here for every account size, for every risk tolerance. The market has what you need. This is why I love it. This is why I chose this. All right. So she paid $291 because she's in the spread. I'm dead. And $291 for a month of time to also have some cushion, because spreads meaning you're buying a call and a put at the same time and kind of seeing what that's going to do. And so it's great. It's just, it manages well. And then you can still make profit off of it. All right. And there's so many different strategies. There's credit spreads, there's debit spreads. So credit spreads is a selling strategy, debit spreads is a buying strategy. You have butterflies, which is like 4 contracts at a time. You have straddles and strangles. So that's also what Tandra kind of alluded to. She's in the debit spread straddle, right? She's on both sides. She's in a call debit spread and a put debit spread. So she's straddling it, okay? While also in a spread to manage her losses. Okay, you get fanciful up in here, man. Fanciful, fanciful, fanciful. All right, I love it. Love it, love it, love it. So, I mean, this is really coming down. We got that gap fill yet? No, almost there. Come on, Tanza. Come on, Tanza. Love it, love it, love it. So, guys, any questions? I know a few people may have been needed to exit. Like I said, you can always email me with any additional questions, but go ahead and ask away if you have any clarity. I know we went through a lot today. I hope you guys took notes, but just raise your hand and ask questions. Go ahead, Daniel.
Morning, everybody. I hope everybody's learning, getting some good information. Randy, you're definitely, again, one of my favorite people at InvestFest. A lot of information. I took a lot of notes. I just want to know if I know this is being recorded. Is this going to be emailed to me, or is there anywhere I could rewatch this again? Because there's a lot of learning in this. So is there any way I could, just replay this or anything like that?
So give me to the end of the business day and it should be on YouTube.
You are the best.
Make it easy.
It doesn't
YouTube.
stop.
Say it again.
I said you're the best. It doesn't stop.
Oh, no.
The greatness don't
No
stop.
problem. And I can give you guys a shout out email reminder when it is posted. I can do that for you as a courtesy. But yeah, all of my like special events, I'll always record them and put them on YouTube.
Perfect. Thank you.
No problem. Any other questions? I'm so excited to see you here today, Daniel. Yay, you made me feel my heart. You made me feel so good. Because I did, like you said, we met at InvestFest. So yay to InvestFest. Any other questions, concerns, thoughts when we go over anything else in the presentation? Because if you have the question, I'm sure somebody else does too. All right.
Can I put a thought in? You probably already did it, Randy. I'm watching tech. I need tech to pull back a little bit. So when Apple pulls back, I'm gonna jump in on a debit call side of it. But I need some pullback from it because again, it's when I look at the chart and see how things have been running up these past few days, which I love because I'm a bull by heart. But I want to get into some things that are that are. But Apple's one that I'm looking at to pull back. Of course, Adobe again, because Adobe has been nice to me on this debit spread thing for sure.
Mm-hmm.
And maybe I need to put a little bit of NVIDIA.
Yeah, you might as well finesse it. How
I
much
may
is
as
it
well.
debit spread on NVIDIA?
Right. So NVIDIA, Apple, then of course Cat and Home Depot are some other ones that we like to play with. So
That is another. Thank you for adding those. Cat is relatively inexpensive as well. I was trying to think of all of our inexpensive tickers. Cat is relatively inexpensive. Caterpillar, you know, the company that makes all the, what is that, excavators, whatever, them, you know, the construction machines.
heavy equipment. Yep.
So you have Cat, and then what was the other one you said?
Home Depot.
Home Depot. Yes, that one's fairly, you know, and when we're saying inexpensive, we're saying more like $500 less to get into. All right. $500 less to get into. So yeah.
And what is that Tiffany trades for just the first little 5 minutes?
SOXL. Yes. Thank you.
SOXL. That's another one. That's a Tiffany in the SO. She's been killing it with SOXL with shares.
Yeah, so actually, let me exit out of this for a second. So what Tiffany does, let me pull up the SOXL chart. These are all just take notes. Again, it'll be recorded. And Randy, that's the wrong ticker. SOXL. Boom. All right. So what she'll do, as you can see, the stock itself for SOXL is $23 a share. So what she'll do, she has grown her account a little bit better. But what she'll do is, all by Luke, I'm gonna have to hit Luke up on the side. Is she'll buy like 500 shares of SOXL and trade like a 30-cent move, right? Because when you leverage your or scale into the position, when you scale into position, you can make that money a lot faster. So she'll just go on and buy 500 of them, go for 30 cents, because as you can see, SOXL only moves like $1.62 a day, which is awfully slow. But she'll just get 30 cents and be out, because the morning will always do like a quick move, right? And depending on what you're trading, that quick move can be 30 cents, that quick move can be $4, like Adobe, right? It just depends on what you're trading. And so you could just scale into the position, make your little money, and just be right on out. And we have a lot of people in here as well. Jasenia is another one that trades shares. She'll just go in with a whole bunch of shares, because you don't have to worry about an expiration date, like I just showed you guys with options. So that expiration date will come at you, come at you quick, and you'll be like, oh man, you know, I can't, you know, I'm losing money quicker than what I thought because of the expiration date. And so shares don't expire. As long as, right, what Warren Buffett says, as long as you don't sell, you didn't lose. So you can always just kind of wait for price to come back. You own the shares, so you don't have to worry about like risk of assignment and all of that other stuff. So again, this place, the Traders Crib, is a house for everybody and every strategy. As you, I don't deter people from any strategy. Jasenia be doing that thing with Jasenia and Tiffany, and be buying boatloads of shares and just riding things up. Love it. Make it how you make it. I've heard Jasenia come in here and say, I made $3,000 off just shares. I'm like, go ahead, girl, do it. Do it. It is possible. Anything is possible with the stock market. All right. So, any other questions? Any other questions? Take your time. No rush. Because if not, I'm going to go into what we offer for those who may want to join the crib and be a permanent member of this crazy space. It's my silly self. All right. So I'm just waiting on hands. By any moment at this point in time, I am going to go into what we offer. If you have a question, just go and raise your hand and I will catch it. So what we offer in the Traders Crib. All right. I know some of you guys are still working like 9-to-5 jobs, but this is also another job. So you got to find your time in it. We offer stocks, options, and futures day trading every Monday, Tuesday, and Wednesday, except for holidays, of course, because that's when the market is also closed, right? Except for Forex. Forex is not closed usually on our holidays, right? Forex is not closed. So this is again why I brought up Forex for you guys to take the fundamentals of what I taught today and trade that. And you can always ask me questions. But I don't really look at it and host it on the calls. But if you have a question about it and you are in the crib and you are a member and we want to, because there's a bunch of us that are side hustling Forex, me, Tiffany, a few other people, we're side hustling it. So we do know about it. So you can definitely chime in, ask questions. I think Marsha's another one who wants to trade Forex. There's a few of us that want to trade. If it has a chart, we trade it all. So just bring it to our attention. But it's stocks, options, and futures every Monday, Tuesday, and Wednesday from 9 a.m. to 11 a.m. From 9 to 9:30, we do pre-market analysis. And then when that bell rings, we're in and out. We're looking at the market, and we try to be done by lunchtime. And then on Sundays, every other Sunday at 5 p.m. is where we do our charting. So we kind of go over the basics of charting, the candlestick patterns. We're looking at all of those things. We're looking for our fair value gaps. We're looking at our candlestick patterns. We're looking for our order blocks. And we're putting the lines on the chart, like I showed you guys today, to square off those areas so we can know where we want to get in and where we want to get out. Okay. And we're kind of setting up our charts for the week, month, or whatever. It's bi-weekly, and I used to do every Sunday, but bi-weekly works better because it gives the time for the charts to kind of do something and move, so where we have something else to chart. So if you just want to chime in on homeworks, you can do that. And then we also have our private Telegram chat room, where that is pretty much 24/7. You have some of us jump in there overnight, but for the most part, we're chatting it up during the day, markets, we're sharing information, we're sharing news articles, we're sharing other traders' posts just to get more ideas. Like, nothing is left off the table up in here in the Trader's Crib, because you got to find your own trading style. I'm big on finding your own trading style. So I feel the more information I can give you, the more that you can, figure out your own way. And of course, most of us, once you really start to get in the groove, most of us traders are trading the same way. From anybody else you follow, we're looking at the same levels, same entry and extra points. It's just how you execute it. So it's really all the same. So that's the private Telegram chat. And that's all we offer in the crib for now. If you do want to join, you can either scan, you got 2 QR codes, are going to send you to the same place, the one right this way, the one on my camera screen, as well as this one. And so for being on this call today, you guys get the friends and family promo code. So that will be 30% off the annual subscription of $279 per year, which will come in at around like $196 for a whole year. That's like the cheapest you're going to find out here. I promise you that. If you're not sure about the year yet, then you can do 1 month free by entering the code free month when you subscribe to the monthly subscription. So the monthly subscription is only $30 a month. You can get a free month off with the promo code free month. And if you want to jump in to have access to us whenever you can jump on the calls, go ahead and go for the year, be in and out. I have a few ladies in the crib now that do that. They work 9 to 5 jobs. They catch us when they can catch us, right? And then again, all of my calls are always recorded on my website. So if you do join and become a member, then you'll have access to everything on the website all the time. So therefore you don't miss anything. So you'll see all of our swing trades that we enter, our day trades, they can go quick. So sometimes you do have to be in here or at least catch us on the Telegram to get our day trades. But the swing trades, they take a couple days. So as long as you watch the recording by the evening, you'll know exactly what to jump into the next morning and you'll be good. So I'm just like, do it. Join the crib. It's good. It is a good time. We have fun. We talk it out. We get out our emotions as well. because trading can be a very lonely journey. So it's not just me teaching. Today I am teaching more, but usually it's a very collaborative effort. Tandra jumped on mic. She's always one that jumps on mic, shares what she's doing, shares her experiences. I have a few other people that jump on mic as well to share, to share their overall experience. If they need to get it out, we listen. We're there for you, because some days, like Tuesdays, Mondays and Tuesdays can be slow market days sometimes. We don't have as much going on in the market. So we'll take that time to kind of just talk and be like a community support. And of course, you don't have to join on those. You can be like, okay, y'all not really trading today, I'm just out. It's totally fine. But for those who want kind of like that podcast conversation, there are some trading days where it turns into that, turns into a podcast or a conversation. So it's up to you guys. I hope to see all of you this Sunday. So you have to join to get access to this Sunday's call. I will have a call, a Sunday school charting this Sunday. I know it's Labor Day weekend. We'll be off Monday, and that's why. We'll be off Monday. We'll come back Tuesday and Wednesday of next week to trade. But I want to get some charting in. It's a new month, so I'm going to end up doing a top-down analysis to look at the month and figure out what our next best moves are, since we are entering a new month and expecting some Powell news and Federal Reserve news, I should say, like Powell news, because we just always just call them Powell. So yeah, I'm super excited. I hope you guys all join. See you guys soon. If you do join, one thing I do want to add, because I'm about paying it forward, I make my money in the market. So this is just to sustain the community. And if you join the Trader's Crib, you have the option to become an affiliate. And if you become an affiliate, which is completely free, there's no additional cost to become an affiliate. But what it does do is every time you advertise the Trader's Crib to somebody, and they subscribe through your affiliate link, you will get 20% commission of that money, just straight to you, your account, build the trading accounts up, right? So I have that in place as well for any of you who want to join, get money back for bringing in more people. That's exactly what you'll get. You'll get 20% off of whichever subscription they sign up to. So if it's $30, obviously that's little. We want to get people on annually because you get more. And then you have the option to share that friends and family promo code. So it's up to you, because that's 30% off for them as a friends and family that you can offer them as well. So just in the end, like Tom Hanks, really? Okay. Again, and this is, pay attention to the chat, because when I tell you we be going off on jokes and cracking things up, but it is definitely very lonely. Thank you. So it's kind of hard to just call you by your name, but I have family members in here, so I'm gonna say shout out to my aunts. I got both my Auntie Deborahs in here, y'all. I got two Auntie Deborahs. I love them. So they both made it. Thank you, thank you. I love the love that I got today. I don't have anything else unless you guys have any other questions, comments, or concerns. Always email me at randy@thetraderscrib.com for any additional follow-up. Follow us on Instagram and YouTube. That's the primary two that we're on, but I have all social media handles as well. And I hope to see you guys on Sunday. Jasenia dropping on YouTube. Jasenia, what is that, like 4 times? Oh man, I love it. Love it. Love it. Love it. Thank you guys so much. Take care. Enjoy the rest of your day, and I will see you guys on Sunday.